Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now let's get started with a brand new chapter called as cost sheet. Shall we get started? Kekla Sattama. Good. So let's get started with this chapter called as cost sheet. Now, what do you mean by a cost sheet? Now, very simple. Cost sheet is nothing but a statement that contains the total cost plus profit that gives you the sales value. Clear with this? So it is nothing but a statement that collects all the costs that you have incurred, right? In those three areas. What are the three areas? Factory, your corporate office, and your sales depot. It collects all the costs, add a profit, arrive at the sale. If you are presenting it in a statement format, this is called as a cost sheet. Are you clear with this? Right? Now there is a format of cost sheet given here. Now, for you to understand this format of cost sheet, not even one line item needs to be mugged up here. I will walk you through the entire thing. For you to understand this format of cost sheet, this is the new and the latest format of cost sheet given by ICA as per your applicable for your, for your examination, all of that. But earlier, like some 10 years back, right, Institute had an old version of cost sheet. Now, I am going to walk you through that old version of the cost sheet because that was even more better. And from there, now if you read the new version of cost sheet, you will be understanding it in a crystal clear manner. Clear with this, guys? So now, what does the old format of cost sheet says? It says the format of cost sheet is as follows: opening stock of raw material, add purchases minus closing stock of raw material gives you direct material consumed, add direct wages and direct expense gives you prime cost, add production overheads gives you gross works cost, add opening WIP less closing WIP gives you your cost of production, add opening FG less closing FG gives you COGS, and it prepares another statement, two statement approach, income statement. Here it says sales minus whatever cost of goods sold you computed here, you subtract, you get your gross profit minus AOH minus SOH operating profit. Chapter over. Now guys, now wait. This is a very logical and an interesting way of learning this particular subject. If you just read these line items, nothing will happen, right? Now, shall we start learning it conceptually? Yes? Fine. Now, one thing I taught you in the basic concepts area. Product cost expires to the extent of cost of goods sold. Agreeing with me? Guys, come on, answer. And period cost expires fully. What do you mean by period cost? Period cost means any cost incurred outside the factory, non-manufacturing cost. Basically, what are they? Two items, AOH and SOH, administration overheads and selling and distribution overheads. Now look at the income statement. Whatever we learned has only been actually mentioned here. From sales, they are reducing cost of goods sold and calling it as gross profit, trading account item. From gross profit, they have reduced AOH and SOH and they are calling it as operating profit. Agreeing with me? Yes. Any problem here? No. Now, this entire cost sheet ideally is about calculation of cost of goods sold, because I told you every unit of a product is only valued at manufacturing cost, and only manufacturing cost, that is product cost, should be classified as your cost of goods sold and your closing stock and all, right? So this entire cost sheet revolves around calculation of your cost of goods sold ideally. Are you clear with this? Are you clear with this, guys? So now let us logically see how to arrive at this particular cost of goods sold. Deal? Shall we get started? Shall we get started? Okay. Now I taught you earlier that in a company there are three locations. Come on, tell me, what are the three locations? Factory, then you have a corporate office, right? And you have a sales depot, right? In a factory, what is the activity that happens? Production. In a corporate office, what is the activity that happens? Administration. And in a sales, what is the activity that happens? Selling activity. Now, corporate office, AOH. Sales depot, SOH, not a problem. Income statement, statement number 2. Income statement items, I don't have a problem. Now the issue is only with respect to my manufacturing area, my factory area. Clear with this, guys, right? Because my cost sheet, that is the statement one as per the old approach, revolves only around my manufacturing costs. Guys, clear with this? Now, now, further zoom in. Inside a factory, further there are three locations. Inside a factory, further there are three locations. What are the three locations inside a factory? First, you have a place called as stores. You have a place called as stores. Now, what is this area? This is the place where raw material gets stored. Clear with this? You have one more area called as a factory shop. What do you mean by a factory shop? This is the place where the machines are there and the conversion of RM into FG happens. Clear with this, guys? So this is a place where your work in progress, the work is in progress. Clear with this? Guys, if you learn it this way, cost sheet, even if you want to forget, you cannot forget for a lifetime. Clear? Fine? Now, the final area that you have is actually a place called as a warehouse where finished goods is getting stored. There are three different types of inventories: RM, WIP, and FG. You all know that, guys? Yes. Now, for you to understand this concept of cost sheet, you need to know how the cost flows. That is, I call this as flow of cost. So from the beginning, from purchase till the type of conversion of this RM into FG, how does the cost flow? You should be able to understand. And if you are able to understand, the entire format of cost sheet is automatically done for you. Shall we get started, guys? Shall we get started? Come on. Yes. Now, first, stores area. Now, what happens in a stores area? I told you, in a stores area, raw material gets stored. Guys, yes? No. At the beginning of period, there will already be some opening stock of raw material. Agreeing with me? Now, during the period, I can also purchase and keep some raw materials. Guys, yes? Right. Now, opening stock of raw material plus purchase, right? If I do, this is the total raw material available for consumption. Agreeing with me? Now, out of this total raw material available for consumption, I can only do two things. One, I can consume a portion, and number two, a portion of it can remain unconsumed, or I can call it as closing stock of raw material. Guys, yes? Right? Now, the top figure is actually called as raw material consumed. Agreeing with me, guys? Agreeing with me, guys? Now, this figure, raw material consumed, can also be arrived at by saying opening stock of raw material plus purchase. This is the total available for consumption. Out of that, you reduce what has not been consumed. You can arrive at this figure of raw material consumed. Guys, clear with this? That is the first leg that has been mentioned here. Opening stock of raw material plus purchase minus closing stock of raw material. You will arrive at your direct material consumed. Guys, clear with this? Right? Now, what happens to the raw material consumed? Obviously, you won't remain idle. You will insert it into your machine. Guys, yes? So this raw material consumed enters into your machine. Guys, correct? This is actually your factory shop where the work happens in progress. Agreeing with me, guys? Yes? Now, on top of this raw material, will it just abracadabra? Will it just convert into FG? No. You need to incur some direct wages. You need to incur some direct wages. Guys, yes? Yes. Apart from that, you need to incur some direct expense. Yes. And apart from that, you need to incur some production overheads, indirect costs and all. Only if you incur all these things, your raw material gets converted into FG. Agreeing with me? Agreeing with me? Now, even in a WIP area, at the beginning of the period, you can have some opening WIP. At the end of the period, you can have some closing WIP. Guys, agreeing with me on this? Right? So here also I can say, first add opening WIP. What do you mean by opening WIP? Some portion of the goods, I started production in the previous period, but at the end of the period, I couldn't complete it. It remained in my factory, guys, inside the machine. Now, in this current period, whatever is there, that I will complete it only, guys, correct? And on top of that, some fresh issues of material, labor, direct expense, and production overheads will be incurred, guys, correct? Yes. Now, this is ideally speaking the total gross total of all the costs incurred, guys, in the current year, right? Out of this, what can happen? A portion you can complete it in this year itself. A portion can remain uncompleted or incomplete as at the end of this period. Guys, agreeing with me on this, right? So this overall cost incurred can further be classified into cost of production and closing WIP. What do you mean by cost of production? The cost incurred in respect of goods completed, guys, correct? And what do you mean by closing WIP? The cost incurred in respect of goods incomplete, because they have also incurred some cost. Maybe they're 50% complete, means a portion proportionately should give them some cost. Guys, agreeing with me on this, right? Now, this cost of production, can I arrive at it by saying this is nothing but all these costs put together, add it up, right, minus closing WIP. If you do, you will arrive at the total cost incurred in respect of goods completed in this period. Agreeing with me? Agreeing with me? Now what happens here? What happens here? This completed units, where will it go? It will go to my warehouse, guys, correct? So now in my warehouse area, what happens? So now I get the current year production. This is nothing but the goods freshly produced in this current period, guys, correct? Now similarly in the warehouse, I can also have some opening stock of FG. Guys, I have already completed in the previous period, but I haven't sold it yet, correct? Opening stock of FG plus the current year production, can I say, is represents the total goods available for sale. Agreeing with me, guys? Now, out of this total goods available for sale, I can sell some units, I can keep some units unsold, guys, correct? The cost incurred in respect of units sold is called as cost of goods sold, guys, yes? And the cost incurred in respect of goods remaining unsold is called as closing stock of FG. So for COGS, can I say COGS is nothing but opening stock of FG plus the current year production, that gives you the value of total goods available for sale minus whatever you have not sold, that is my closing FG. Can I say that is equal to my cost of goods sold? Guys, agreeing with me on this? Agreeing with me on this? This is how they arrive at the cost sheet. Now you look at it, you will understand. Now first, opening stock of raw material plus purchase minus closing stock of raw material gives you your direct material consumed, guys, correct? Now on top of this, it will not get automatically converted. Now I enter into my WIP area. I have to incur direct wages, direct expense. Wait, this subtotal is called as prime cost. Agreeing with me? Now on top of this, I incur something called as production overheads. Basically this is nothing but I'm adding all the costs incurred right now, guys, clear? Now if I add this, I give it a name called as gross works cost. Why gross? Because this is before netting off my opening and closing WIP. Clear with this? Now what will I do? Add opening WIP, that is on the debit side only, that is also a cost, minus closing WIP. Now I will get my cost of production. That's also called as a net works cost. Guys, clear with this? What do you mean by cost of production? Cost of production represents the cost incurred in respect of every unit completed and produced in this year. Guys, correct? No, this represents the cost incurred in respect of every single units produced in this year. Guys, clear? Clear? Now what I do, I enter into my warehouse area. Now what I do, I already have some opening stock of FG. So I add opening stock of FG. Wait, now opening stock of FG plus current year cost of production represents what? Cost of goods available for sale, right? That is not required. But from that, if you remove the closing FG, that is nothing but your units unsold, you will get the cost incurred in respect of goods sold. Clear with this, guys? Now once you get this, what you do, part 2, you go to the income statement. From your income statement, sales minus cost of goods sold gives you your gross profit, trading account item. From that, you reduce the 2 period costs, fully knock off AOH minus SOH, you get your operating profit. As simple as that. As simple as that. Just in a span of 15 minutes, this is all about the entire format of cost sheet. Guys, are you all clear with this, guys? Are you all clear with this? Now, you guys tell me the format of cost sheet just by looking at it. Just by looking at this. Come on, everyone participate. First, opening stock of raw material plus purchases minus closing stock of raw material gives you raw material consumed. Now to this, now you enter into your WIP area. Add your direct wages, add your direct expense. Wait, the subtotal is called as prime cost. What do you mean by prime cost? Sum total of all the direct costs we saw yesterday. Right. Next, to this what I do, add your production overheads, call it as gross works cost. Why gross? Because we are yet to adjust the opening and closing WIP. Now to this add your opening WIP, subtract your closing WIP, you get your cost of production. Right? Now, now we are entering into warehouse area. Now add opening stock of FG minus closing stock of FG, you get your cost of goods sold. Statement number 1 is done. Now what you do, your second income statement, that's your trading and P&L account. Now what you basically do there is sales minus COGS gives you what? Gives you gross profit. From there, reduce your AOH, administration expenses, administration overheads, minus SOH, selling and distribution expenses, gives you what? Operating profit. Be very, very clear. What we report in costing is not a net profit, it is operating profit. Why? Because if you see, we have only considered the cost incurred in 3 locations: factory, your administration, corporate office, and your sales depot. There could be some finance related costs like interest on debentures and all these things. No, we don't consider all of that. Are you clear with this? Are you clear with this? And a few line items like taxes, we don't consider. Or in other words, the profit that we report is ideally called as EBIT. Clear with this, guys? So costing stops at EBIT and your FM starts from EBIT. Guys, clear with this? So it's actually once again like your universe only, like LCU only, right? So what happens is your costing and FM are ideally, they go hand in hand. The stopping point of costing becomes the starting point of your FM. Clear with this, guys? Clear with this, guys? That's why if you see in your FM leverages chapter and all, costing reference comes with respect to operating leverages. Guys, clear with this? So because our costing area stops at EBIT. Clear with this, guys? Clear with this, guys? Here we don't consider any kind of non-operating income also. Rent received, interest received, nothing of that sort. The only income that we consider is your sales revenue, revenue from operations. Are you all clear with this? Are you all clear with this? Or in other words, you can say cost sheet is nothing but your trading and P&L account in a statement format. Guys, correct? No, it is a trading and P&L account in statement format. At the end of the day, in your trading and P&L account, what do? Sales minus COGS is equal to gross profit. That's nothing but your trading account. And minus AOH, SOH, you report your operating profit. That's nothing but your P&L account. Guys, clear with this? So basically, your cost sheet, statement 1, is ideally a working note to the income statement, where in the first statement, we compute the cost of goods sold. Guys, are you all clear with this, guys? Right? Isn't it logical? Isn't it logical? Now, this is why I say mugging up in costing is not even a sin, it's a crime. Similar thing goes for financial management also. You should never mug up. Everything is logical here. Guys, are you all clear with this? Are you all clear with this? You guys are understanding this? Yes, right? Yes. So one last time. Can you just tell me the format of cost sheet? Come on, quick, let's revise now itself. Now, it's going to be opening stock of from everyone. Opening stock of raw material plus purchases minus closing stock of raw material gives you raw material consumed. Now enter into your WIP area. Add direct wages, direct expense, call it as prime cost. Now add production overheads. Now call it as gross works cost. Why gross? Before netting off the opening and closing WIPs. Add your opening WIP minus your closing WIP. You get the cost of production. This is ideally the cost of every single unit fully produced in this year. Right? Now you enter into the warehouse area, visualize, right? Now add opening FG minus closing FG, you get your cost of goods sold, right? And now that's the end of the first statement called as cost sheet. Now enter into the second statement, sales minus cost of goods sold gives you what? Gives you your gross profit. Now minus AOH minus SOH gives you your operating profit. As simple as that, guys. Now you tell me, isn't it logical? Isn't it logical? Please do not mug this up. Clear? Fine. Now let me go to this concept notes, the decoder notes. Now here the format of cost sheet. This is the existing format, right? Now small tinkering they have done, very small tinkering they have done, and with that tinkering they have arrived at the new format of cost sheet. Now in this new format, first thing, no two statements are there. There is no two statements. They have merged the entire thing into a single statement. Clear with this? Now you look at this here. It's going to be opening stock of raw material plus purchase minus closing stock of raw material gives you what? Direct material consumed. Any issue? It's the same. Add your direct labor, add direct expense, gives you what? Prime cost. Now add your production overheads, gives you what? Gross works cost. Add opening WIP minus closing WIP. They call this as factory cost. Now what they have done is they have added some 5 line items here. They have added some 5 line items here. Sir, what are these 5 line items? We have never heard of. You never taught us. Nothing. If you read this, one is called as quality control cost. Then you have something called as research and development cost. Then you have something called as administration overheads related to production. Please do not confuse. This is not administration overheads, because look at this. Administration overheads is there separately. This is admin overheads related to production. This is a separate line item. I will walk you through every single one of this. Do not worry. Then you have something called as primary packing cost, less credit for recoveries or scrap income. This they call it as cost of production. Sir, what is it? Nothing great, guys. Actually, see, quality control cost. What do you mean by this? Now, for the purpose of quality control, let's say you buy this plastic products. In that one sticker will be there, no, QC or tested OK. These kind of stickers will be there. Basically, what they do is they conduct inspection in the factory just to make sure that overall the quality has been maintained. Guys, correct? Now, where does this activity happen? In the factory only, no? It is a direct or an indirect expense. It's an indirect expense happening in the factory. Ideally, this is a part of your production overheads. Guys, ideally this should have been included in your production overheads here. Yes, it should have been included here. Guys, correct? But institute wants you to mention this on the face of cost sheet. That's simple. Clear with this? Ideally speaking, all these 4 addition and 1 deletion, these are a part of your production overheads. What do you mean by production overheads? Any indirect manufacturing costs incurred inside the factory is called as production overheads. We saw that in basic concepts, right? You tell me quality control cost, where is it incurred? Inside the factory. Guys, correct? Yes, you guys are understanding. Ideally, it should have been a part of POH, but what the institute says is, no, you remove it from POH. I want it to be mentioned on the face of the cost sheet. Present it like this. Are you clear with this? Some small presentation alone, they have changed it. Guys, are you all able to understand this? Right. Second, research and development cost. What do you mean by this? R&D cost. Now, for example, a company comes up with an innovative idea of, let us say, for example, a company comes up with an innovative idea of completely mechanizing the entire production. That is, not even a single human being is involved. The entire production can be done with robots. Clear? Now, this R&D, it involves some cost. You need to hire some scientists and all that, guys, correct? Now, this activity is very much related to production, because here this R&D is related to your production facilities. Guys, clear with this? So ideally, this is also an indirect manufacturing cost only incurred in the factory. Guys, correct? Right? So once again, ideally speaking, this is a part of POH, but institute wants you to present it on the face of your cost sheet. Are you all clear with this? Are you all clear with this? Any problem here? No. Next, administration overheads related to production. What do you mean by that? Now, I told you guys an example of your Maruti Suzuki. There, the worker who fits the doors, it's a direct worker. The wages I pay to him is a direct labor. Guys, correct? His boss, who is his boss? Supervisor. He will stand like this. Where does he stand? He stands on the factory shop only. He stands here, right? This guy is whatever salary I pay him comes under production overheads. Guys, correct? Now, this guy has one more boss who is actually the plant head, production control manager. Now, where does he sit? He also sits in the factory only, but inside an AC room. Guys, correct? Now, whatever amount I pay to him, is administration overheads but related to production. Why? He's not sitting in the corporate office. He's sitting in an AC room, but in the factory itself. Guys, clear with this? Clear with this? Now, this also our institute wants to mention it on the face of cost sheet. Remember one thing, cost sheet is not like Schedule 3 and all, where the format is prescribed by the law. Nothing. Nothing. You can change it as per your convenience. If you are actually a CMA student, if you see CMA Institute would have given a different format of cost sheet. Guys, clear with this? So our institute, they want to keep this as the format, and hence they are testing it like this. Are you all able to follow this, guys? Are you all able to follow this? So AOH related to production, what will you remember? The plant head, he is there in the factory, but in the AC room. Guys, clear with this? Clear with this? So 3 types of workers I told you in a factory. One is that assembly line worker, door fitting, direct labor. Then supervisor, production overheads. Then your overall boss in the factory, that is your plant head. Where does he sit? In the factory, but in an AC room. Administration overheads related to production. Guys, are you all clear with this? Are you all clear with this? Right. Next, primary packing cost. What do you mean by a primary packing cost? Now, you should understand one thing. Packing costs are of 2 types. One is called as a primary packing. The other one is called as secondary packing. What do you mean by primary packing? Without this packing, the product cannot be sold. I give you one example. You guys know this Coca-Cola? Yes? You all like it? Okay, no. Okay, then what do you guys like? Only... Okay, fine. Now, this Coca-Cola, guys, why aren't you answering? You guys are understanding, right? Now, this Coca-Cola, now, it necessarily need to be bottled, you know? Or can you go to the factory and... Guys, yes, it needs to be bottled. Now, that bottle, or whatever, the PET bottle or the plastic bottle, the cost incurred for that is actually a primary packing cost that comes under your production area only, ideally a part of your production overheads, but what they do is they actually want you to mention it on the face of cost sheet. Are you all clear with this? However, what happens if you see this bottled, glass bottled Coke is there, no? Right? If you see in the shops, it comes in crates. Right? These crates actually are not a primary packing, they are secondary packing. Sir, why is it secondary packing? Because these are not meant for making this particular product marketable, they are meant for distribution purpose. It comes under selling and distribution. This gets categorized under SOH. Are you clear with this, guys? Are you clear with this? So primary packing cost should ideally form part of your POH, but what institute wants you to say is, what they want you to do is, they want you to put it as a separate line item. Are you all clear with this? Remember this Coke example? So the primary packing cost comes under separate line item, manufacturing area. Your secondary packing comes under your selling and distribution overheads. Are you all able to understand this? Yes, fine. And finally, you have one more thing that's called as scrap income. Now, when I am producing, right, I incur full costs, right? I incur some overall costs, but inside that, whatever I produce, maybe some units might actually get scrapped off, correct? Right? So whenever I'm selling this, I might get some income. For example, Tata Steel, when they are manufacturing the steel rods and all, right, when they are cutting, some steel pieces will actually go waste, you know, right? Now, they won't actually keep this idle. They will sell it to all these vendors, like your old newspaper wala and all that. They will sell it to a scrap dealer. They will try to recover whatever amount they can. Guys, correct? Now I have incurred cost even in respect of these scrapped units, no? So whatever income that you earn out of it, it is only fair if I go and reduce it to the cost. Are you all understanding this? Are you all understanding this? So these 4 addition and 1 deletion ideally are a part of your POH, but institute wants you to mention it as separate line items. Are you all able to follow this? Are you all able to follow this? Now tell me, guys, what are the 4 addition, 1 deletion? Come on, tell me. Quality control cost. That mug example I told you, tested okay. Clear? Next, research and development cost, that scientists and all I told you, obviously it's also a part of your production overheads only, but separate line item. Then admin overheads related to production, plant head, AC room in a factory, then primary packing cost, coke, right? And finally, less credit for recoveries. That's nothing but your scrap income. Tata Steel example I gave you. Come on, once again, 4 addition, 1 deletion. What are they? Quality control cost, research and development cost, administration overheads related to production, primary packing cost, less your scrap income, that is credit for recoveries. Clear with this? Once you do that, they call this as the cost of production. Are you clear with this? Now life is the same, no problem at all, everything is same. Add opening FG minus closing FG, you get your COGS, right? Now they are not stopping here, they are continuing. Add the two other costs. What are they? AOH and SOH. Guys, clear with this? So they are first wanting to compile all the costs. They don't want you to go to the other statement. Now sales minus cost is equal to profit. Don't do that. Here you do cost plus profit is equal to sales. You arrive at like this. Clear with this? So your COGS is nothing but your product costs expired to the extent of COGS I told you. Guys, correct? And AOH and SOH, they are all period costs. They expire fully. Guys, if I subtotal this, I call it as cost of sales. Can I say cost of sales is nothing but the total expired cost? Why? Product cost expires to the extent of cost of goods sold. Period cost expires fully, right? So if I add up and collect everything in a truck, right, I call that as an expired cost. Are you clear with this? Now expired cost plus profit, or cost of sales plus profit, gives you sales. Are you clear with this, guys? Are you all able to understand this? Are you all able to understand this? Now quickly, let's do this format of cost sheet once again. Come on, everyone participate. Opening stock of raw material, guys, everyone, plus opening stock of raw material plus purchases minus closing stock gives you what? Direct material consumed. Now enter into your WAP area. Add direct wages, add direct expenses, gives you what? Prime cost. To this add your production overheads, it gives you what? Gross works cost. Now add your opening WIP, subtract your closing WIP, you call it as what? Not cost of production. Institute names it as factory cost or net works cost. They call it as factory cost. This alone is changed. Now what they are doing? 4 addition, 1 deletion they want you to do. What are the 4 addition, 1 deletion? First, quality control cost. Then research and development cost. Then admin overheads related to production. AC room in a factory. Remember that. And primary packing cost, coke, remember, minus credit for recoveries. Now what you get is your cost of production. Now life is the same. Add your opening FG minus closing FG, you arrive at cost of goods sold. Add all the other two period costs, that is AOH, add your SOH, you arrive at something called as cost of sales. That's nothing but your total expired cost. Add a profit, you arrive at your sales. Clear with this, guys? Are you all able to understand? Yes. Finally, one last time, please. Yes, and then we will get started with the numerical problems. You will have crystal clear clarity. Nothing needs to be mucked up, is my commitment to you all. Yes, one last time. So now I'm not going to open this up. You guys are going to tell me. Come on. Opening stock of raw material plus purchases minus closing stock of raw material gives you raw material consumed. Guys, 1 second. Visualize that flow of cost. Those 3 locations in a factory. If you visualize it, automatically it will lead you. Clear? Opening stock of raw material plus purchase minus closing stock of raw material is equal to raw material consumed. Now tell me. Yes, add your direct wages, add your direct expense. You get what? Prime cost. Right? Now add your production overheads. You get your gross works cost. Now add opening WIP minus closing WIP. You arrive at your factory cost. Now Institute does that. Institute is doing their additions. What are they? 4 addition, 1 deletion. What are they? Come on. Quality control cost. Then research and development cost. Then administration overheads related to production. Then primary packing cost minus credit for recovery, scrap income. What you get is your cost of production. Now you enter into your FG area. Yes, what are they? Add your opening FG minus closing FG. Wait, so cost of production plus opening FG is the cost of goods available for sale. Out of that, reduce whatever you have not sold, less closing FG, you arrive at your cost of goods sold. Right? Now, don't stop. Add AOH, add SOH. Now your goods have come out of the factory. Just add the 2 period costs, AOH, SOH. You get your total expired cost. That's called as cost of sales. Now add your profit, you arrive at your sales. Guys, clear with this, guys? That simple it is. That simple it is. In just 35 minutes, we have literally covered what this cost sheet has to tell you. Guys, are you all able to understand? Easy, isn't it? Easy, isn't it? Right? This is a learning for a lifetime. Even if you want to forget, you cannot forget. Clear with this, guys? Right? No, sir, that's about it, sir. Of course, there are some advanced level issues like stock valuation and all. Sir, in case of losses, treatment of losses, there could be normal loss, there could be abnormal loss and all of that. Now, WIP valuation, how to do that, we will be seeing it in a separate chapter called as process costing, right? Overall, there are some additional issues which we will be seeing in the respective chapters. Some issues we will be seeing in this chapter itself. But overall, this is the format of cost sheet. Are you all able to understand this, guys? Are you all able to understand this, right? So now that two statement approach, now the reason why I said this is good, this is better, because of one thing. Now, if you notice here in cost sheet, what you need to do is you need to generally have two columns. One is a total column and one is a per unit column. Now, guys, please focus here. This is one common and a grave mistake which many students do. For the cost sheet items, this total column is there everywhere, no? Right? This total column, direct wages, direct expenses, all these things. If you divide it by units, you will arrive at your per unit figure. Guys, correct? Now, all the cost sheet items are linked to units produced. Are you clear with this? They are linked to units produced. Why? I am in the factory. Whatever cost I incur it for every single unit actually produced. Guys, correct? So when you are unitizing it, divide it by units produced. Guys, clear with this? Then what about income statement? Every line item of this income statement should be unitized, keeping the base as units sold. Why? They are all period costs now, or in other words, they are all expired costs. Expired cost only gets knocked off against your revenue. Guys, clear with this? Clear with this? Suppose you are following a single statement approach, what happens? You need to be extremely careful up to this cost of production. Right? It is actually your unitized with your units produced. Opening stock of FG is the actual number of units of FG. Closing stock of FG is the closing stock of FG. Not a problem. From here onwards, it is actually linked to you are entering into your income statement area. You should unitize it, keeping the base as units sold. Many students commit this mistake. That's why I said the two statement approach is actually seeing the best approach. Now, sir, in exam, what should I follow? You need not have to worry. In exam, you can follow the new approach. Absolutely no problem. But make sure that you are actually keeping this into mind. Are you able to understand? Now you get it. Why I took the old statement, with that I introduced you to the new statement. Are you able to understand? Directly had I entered into the new statement approach, you might not have appreciated it well. Are you all able to understand this, guys? Are you all able to understand? That's about the broader sense of this particular chapter. Shall we go hit the numerical problems? Yes. Now if you see, the lineup of numerical problems that we have here is so beautiful that every question you will see, there will be an incremental learning. And by the time you finish all the questions, some 10, 11 questions are there. By the time you finish it, you can handle any kind of question because I have covered all the variety of questions here. Clear with this, guys? Clear with this, guys? My duty is to make you guys self-reliant, right? Some students blindly, they do some 100, 200 questions. It only gives you an effect that, I've done so much. No, same question if you do repetitively, there's no actually learning there. Clear with this? You do it as a practice, no doubt. But when you are learning it, cover all the variety of problems, make yourself self-reliant. Any kind of question that comes in, right? In cricket, they say Yorker or full toss or anything that comes, bouncer, whatever it is, you should hit it for a 6. Clear with this, guys, right? Shall we get started? Shall we get started? Yes. So please take your solved question bank here. And let me read out the question for you. From basic level to advanced level, we will be proceeding. Okay, shall we start? Guys, show some energy level. Guys are feeling sleepy? Okay, then you are actually sleeping, is it? Okay, guys, come on, let's start. Shall I read the first question? Okay, now question number 1. Farewell Limited is a metal and a wood cutting manufacturer selling products to home construction market. Consider the following data for the year 20x1. they have given some line items of expenses which I will read, do not worry. First, required, prepare an income statement with a separate schedule, with a separate supporting schedule of cost of goods manufactured. Basically, they are asking for the two statement approach. This is statement number 2. This is statement number 1. Separate supporting schedule for COGS is nothing but your cost sheet under the two statement approach. Guys, correct? Right, this is what they've asked. And for all the manufacturing items, indicate by V or F whether each is basically a variable cost or a fixed cost, where the cost object is a product unit. So keeping in mind every unit as the base, tell me whether a particular line item is variable or fixed. Some addition they have given. Ideally, guys, this chapter cost sheet, it goes on to achieve the objective of stock valuation and profit computation. I told you guys in the basic concepts area itself, correct? So now cost needs to be looked at from the perspective of product cost, period cost. That is nothing but expired, unexpired. For that you should know manufacturing, selling and admin. A1, A2, A3 classification is only relevant here. Guys, clear with this? Clear with this? Right? Are you all clear with this? Now in this case, variable and fixed, that classification is relevant? No, but they have just asked it in the question. Just mention whether it's variable or fixed. Clear with this, guys? Are you all able to understand this? Right. If in doubt, decide on the basis whether the total cost will change substantially over a wide range of product. Sir, I don't know whether this is variable or fixed. This could be semi-variable. They don't want to get too technical about it. Just see, if I increase the production, overall, will it increase? Yes, in that case, call it as variable. That's all. Don't look at exact proportion and all. This is ideally not the test here. The test here is about preparing your cost sheet. Shall we get started, guys? Right? The part 2, part 3, part 4, we will see it later on. Now, first, you guys tell me, what is this company into? What business are they into? Metal and wood cutting manufacturing. Correct, guys? They are into metal and wood cutting manufacturing. Yes? Now, each and every line item, you guys know the format of cost sheet? No problem at all. Now, whenever you're reading a line item, you just tell me where will it be plugged into? Where, under which area it will come? Now you have direct material, direct labor, direct expenses. Apart from that, in the factory, you have one more item called production overheads. In your production overheads, what will come? Any indirect costs incurred inside the factory will come under POH. Correct? You will not have separate line items for salary is so much, your depreciation is so much, your repairs and maintenance so much. No. Club everything under a single bucket called as POH, and it should hit your cost sheet. Guys, that's what I've taught you. Yes. Now, this company is into metal and wood cutting manufacture. Let's say it's a carpentry business. Now you tell me, first thing, sandpaper they have given. Sandpaper. Why do they use this sandpaper? For giving that finish, right? Now, ideally speaking, this is an indirect material. It's not a direct material. Direct material is wood. Guys, correct? Indirect material. Guys, are you clear with this? So this comes under, very good, production overheads. Any problem here? No. Right? Is it variable or fixed? Now they have given in the question, overall, if I increase the production, if it increases drastically, you call it as variable. So you can call it as variable, but ideally speaking, it's semi-variable. It can't be proportionate. Guys, correct? But since the requirement of the question is given, we have also mentioned it like that. But the most important thing is the classification. Are you all able to understand? Next, material handling cost. Where will it come? Huh? Production overheads. Any other answer? Come on, quick. Material handling cost, where will it come under? Now, when I say purchases, opening stock of raw material plus purchases, all the costs associated with purchases should come here. For example, freight inwards. What do you mean by freight inwards? The cost that I incur to bring the material from my supplier location to my location, that should also be considered under raw material purchase cost. Guys, clear with this? Now, freight inwards or any cost that you incur to bring the raw material to your stores area should be considered as a part of your purchases. Clear with this? Now you tell me, material handling cost, where will it come? Where will it come? Purchases? No. I wanted to create this doubt and then I wanted to solve it. Material handling cost, someone said production overheads is the right answer. The reason why I created this doubt and I'm solving is because the moment students read material, they come to a conclusion that it is a material related cost. No. So what do you mean by material handling cost? From the stores area, I need to take it to my machine. Guys, correct? Inside the factory, after reaching the stores, there will be some material handling that will be happening in the inside the factory. Guys, correct? If you see in the factory, they will have some mini forklift trucks and all that, right? With that, they will lift all these cartons and they will take it. That is called as material handling cost. This is not related to purchase activity, my friend. Clear? Are you all able to understand? Material handling is a cost that happens after the material comes to my stores, and I need to issue it to my production, to my factory shop. That is my WIP area, right? The cost incurred here is called as material handling. It is indirect in nature, yes. Incurred in a factory, yes. Put it under POH, guys. Correct. Next, lubricants and coolants. Where will it come? Simple. Where it is incurred, factory. Will it come under any of the direct costs? No. Park it as POH. As simple. You need not mug up anything. It's all logical. First, decide which location. Second, is it a part of direct components? No. Then you will park it under POH. As simple as that, guys. Logical, no. Should you mug up anything? No. Next, miscellaneous indirect manufacturing labor. Where will you put it? Simple. POH. Correct, guys, correct. Because your POH stands for indirect material plus indirect labor plus indirect expenses. Guys, correct. Lubricant and coolant was an indirect material. Here they have given indirect labor. Then, direct manufacturing labor, separate line item, direct wages. Now, material as at the beginning, as at the end. So, this is opening stock, closing stock. These are all separate line items on the face of cost sheet. Opening and closing stocks are all separate line items. No problem. Next. Plant leasing cost. Plant leasing cost. Where will it come? Where will it come? Simple. If I use my own machine, right, I charge depreciation on that and I classify it under production overheads. Suppose I am not buying the machine, instead I am renting it. On that every month I need to pay some lease rent, right? So it is actually related for production. Yes. Is it a direct cost? Every unit you produce, you need to pay so much rent. You can't establish that relationship. So you put it under your production overheads. Guys, are you all clear with this? Are you all clear with this? This comes under POH. Next, depreciation on plant equipment. Some machines I have purchased on my own. On that the depreciation comes under. Guys, POH. Property taxes paid on plant equipment. Where will you incur? Factory. This is on what? Plant equipment. Guys, correct? So it's a factory. Direct or indirect? Indirect in nature. Where does it come under? POH. Are you all clear with this? Are you all able to understand? Fire insurance. Fire insurance on plant equipment. Once again, it's on the plant equipment incurred in a factory. Direct or indirect in nature? Indirect. Put it under POH. Guys, are you all able to understand this now? Right? Next, direct material purchase. Separate line item. Revenues, it's sales. Separate line item. Last line item. Guys, correct? Right? Next, marketing promotions. Where will it come under? Selling overheads. SOH. Selling and distribution. Your marketing salaries, SOH. Distribution cost, SOH. Guys, correct? SOH stands for selling and distribution. Customer service cost, once again, it comes under SOH. Now, one small question. Bad debts, where does it come under? Bad debts. Bad debts, SOH. This is one issue that students generally have. Yes, some of you correctly guessed it. Bad debts is never a part of SOH and all. Why? SOH, selling and distribution overheads, means what? The cost you incur to sell the product. When does bad debts happen? Post sales. Or number two, it refers to your inefficiency in collection. Correct? If you know that this will turn into a bad debt, will you even sell to this guy? Absolutely not. So it is not a cost you incur to sell the product. Having sold it, it refers to your inefficiency to collect it. Are you clear with this? So bad debts is a non-operating expense, definitely not considered as a part of our subject. Subject itself is not a part. Clear with this, guys? Are you all able to understand? Perfect. Now, whatever they have given here, they have just plugged these figures here. Opening stock plus purchase minus closing stock gives you direct material consumed, plus direct labor gives you prime cost, plus production overheads. Now, they have given a working note here. Whatever we discussed under production overheads, they have just put it here. Sandpaper. So, they have put the figures. Yes, the variable and fixed we didn't discuss. Okay, sandpaper is a variable cost. Material handling. Ideally speaking, these are all semi-variable only, guys. But if you have more material, more production, obviously the handling cost will also increase over volume. In this question, the requirement is clear. If it increases overall, you classify it as what? You classify it as variable. They're saying if it substantially changes, then you put it as variable. Guys, clear with this? For that reason, we are going to put it as variable. As simple as that. But ideally speaking, it's a semi-variable cost only. Lubricant and coolants and all. Okay, fixed cost they have classified. Miscellaneous indirect labor, supervisor salary, it does not move with production. Guys, correct? Yes, then plant leasing, depreciation, fire insurance, your property taxes and all, these are all fixed costs. They don't move along with your output. You guys know that. Are you all clear with this, guys? Any issues, any problem here? Yes, you guys are clear with this? Perfect, perfect. Now, and even for selling overheads, they have added up all these figures and they have put it as this is the total of POH, this is the total of SOH. So now what they have done here is they have just put the format of cost sheet. Come on, opening stock of raw material plus purchases. Tell guys, minus closing stock of raw material gives you direct material consumed. Add your direct labor. In this question, direct expense is not there. Leave it. Gives you prime cost. Add POH. This gives you a gross works cost. Add opening WIP less closing WIP. This is called as net works cost, also known as factory cost. Now wait. As per the new format of cost sheet, 4 addition, 1 deletion, right? Now it is not there in the question. Guys, correct? So what happens is I can also call this as cost of production. I'm bypassing it. Guys, correct? No. We are still in the new format only, but the figures are not given. What will we do? Guys, clear with this. So don't think I'm in the old format. It's not given. So what will we do? Guys, clear? Right? Now cost of production, add opening FG, less closing FG. These figures are all given in the question. Just plug it. That's all. You get your COGS. Right now you have a second statement, income statement, sales, the figure is given, minus COGS, just now we arrived at, so it gives you gross profit, minus AOH. In this question no AOH is there, minus SOH. So working note number 2, all this cost collected together, single item, you hit it here, you arrive at your operating profit. Any problem here, guys? Any problem here? Are you all clear with this? Are you all clear with this? So this can also be done in a single statement, no problem. Yes, or if you want, you can also put it in a double statement. Clear with this, guys? So now, sir, when do we use that single statement, new format of cost sheet? Generally, when those 4 addition, 1 deletion and all comes in, that's when we use the single statement, or even in this case, you can do the single statement, not a problem at all. Clear with this? But since the question has specifically asked you, prepare an income statement with a supporting schedule of COGS, we have done it in a 2-statement format. Are you all understanding this? Yes. Now that completes the first part of the question. Now shall we move on to the second part of the question? Yes. Now suppose both the direct material and the plant leasing cost are tied to production of 9 lakh units. What is the unit cost of direct material assigned to each unit produced? And what is the per unit cost of plant leasing, assuming that the plant leasing costs are fixed? So what they are asking, take these 2 line items alone. They are saying they are tied to a production of how much? 9 lakh unit divided by 9 lakh units, arrive at the per unit cost. This is all they are asking for. Guys, clear with this, right? Now, what have they asked for? First is direct materials. Now, guys, understand one very important thing. Now, when they are asking for direct material cost per unit, now many students, what they do is they take the material purchased figure and they do the calculation. Absolutely wrong. Because for the purpose of production, if you see in this, when I taught you what I did, what gets issued to the production is only my raw material consumed. Correct? As a policy, I can purchase and keep anything. That figure is irrelevant for calculating my cost. For my costing purpose, what is relevant is only the amount that enters into my machine. That is nothing but raw material consumed. So whenever I say direct material cost, it only means direct material consumed and not material purchases. Are you clear with this? Guys, are you all understanding this? So in this question, so now when they are saying the direct material cost per unit is going to be 4,50,000 should be kept as a base. Guys, yes. So 4,50,000 divided by 9 lakh, that gives you 0.5 per unit. They've just asked you to calculate the cost per unit, that's all. Similarly, your plant leasing cost, how much is the plant leasing cost? It's 54,000. Guys, yes. So now 54,000 divided by 9 lakh, that gives you 0.06 per unit. Guys, clear with this? That's all. The part 2 of the question, 0.06 per unit. The part 2 of the question is over. Now, part 3 of the question, what have they asked? Repeat the computation in the requirement 2 for direct materials and the plant leasing cost, assuming that the costs are being predicted for manufacturing 10 lakh unit. In the earlier step, what did we do? We kept 9 lakh units as the base. Now they are asking you, keeping 10 lakh unit as the base, calculate the cost per unit. Basically, they are testing you on the variable fixed cost pattern. Fixed cost remains constant in total. Variable cost remain constant on a per unit level that they want to test you. Guys, clear with this, guys? It has nothing to do with cost sheet. Cost sheet is over in this sum. Simple. What do you do? Now, when my units is 9 lakh, right? What was the direct material consumed? 4,50,000. If I increase the units to 10 lakhs, right, this is a variable cost. It will proportionately increase, guys, correct? How will you arrive at it? 4,50,000 divided by 9 lakh into 10 lakh units, guys, correct? Yes. So take your calculator. 4,50,000. If that is for 9 lakh, how much is it for 10 lakh? So you get how much? 5 lakh rupees. Correct. Now 5 lakh rupees is the cost for 10,000 units. So what happens? The per unit cost, it remains as 0.5 per unit. Guys, clear? Similarly, what happens to your plant leasing cost per unit? It remains the same in bulk. It continues to be 54,000, but it is being shared by more number of units. Why? This is actually a fixed cost. So what happens? The per unit cost of this, it remains, it becomes 0.054 per unit. Clear with this, guys? Or in other words, you can see that this being a variable component material, it remains constant on a per unit level. Guys, correct? Now what happens? The fixed cost, it remains constant in total, and now the same amount of fixed cost is being shared by more number of units, hence the per unit cost actually drops from 0.06 to 0.054. Are you all clear with this, guys? This is what they have explained here. Cost behavior pattern. The direct material cost per unit did not change in requirement 2 and 3 because it is a variable cost, and variable cost remain constant on a per unit level. Guys, clear? Similarly, your plant leasing cost per unit did change in requirement 2 and 3 because it is a fixed cost, and fixed cost remains constant in total but varies on a per unit level. To be more specific, it drops on a per unit level if you increase your output. Guys, are you all able to understand this? Any problem here? Guys, clear? Right? The second, third, fourth part and all is ideally a part of the first chapter that we did, basic concepts, but ideally the first part. Are you all clear with this, guys? Are you all clear with this? Please go and update your library of adjustments. Write down. I think in the previous chapter, the last question, library of adjustment has not been done. I asked you to remind me, but still it's okay. Fine. Write down. So this is for the first. That is for the basic concepts. Go and update your library of adjustment. Chapter number 1, question number 5, is it? That's what Nasonema. Yes. So question number, chapter number 1, question number 5. The previous chapter's last question, library of adjustment. Cost classification. That's all. It's just cost classification. That Marina golf equipment, some no? Guys? Yes. Write down cost classification. That's all. Cost classification. That's all. Now here. Chapter number 2, question number 1, give the page number referencing. Chapter number 2, question number 1, give the page number referencing. Write down. Simple 2-statement cost sheet. Guys, quick. Simple 2-statement cost sheet. Simple 2-statement cost sheet. Within bracket, W.O, stocks, without stocks. Without stocks, W.O means without stocks. Bracket close. Semicolon, components of POH. In this question, there were different components of POH. We did that. Components of POH, semicolon, VC and FC behavior. This also we saw in this question. VC and FC behavior. VC and FC behavior. Done? Are we done here? Right? This is what we have seen in this question. Now you might have a doubt, sir, without stocks, sir. In this question, stocks are all given. When I meant without stocks, there was no stock valuation in this question. There was no stock valuation. Did they ask you calculate the value of closing FG, calculate the value of opening FG? Nothing was there. This is what I meant by your without stocks. Stock valuation was not there in this question. Clear with this, guys? Yes. Now, guys, shall we move on to the next question? Now, before we do that, now I have a few things to tell you. Number 1, in this chapter, whenever they say cost heads, it refers to what? That subtotals, prime cost, cost of production, cost of goods sold, and cost of sales. Clear? In the question, they are asking, prepare a cost sheet and clearly indicate the cost heads. They refer to these 4 subtotals. Are you clear with this? Yes. Next. Each of the elements of cost sheet, now I'm just quickly going through walkthrough. First, direct material cost, guys. Direct material cost. What will come under direct material cost? That is the purchase figure. First, whatever amount you paid to your supplier, that comes under direct material cost. Is correct? No, not just that. I told you any cost incurred to bring my raw material from my supplier's location to my store's area, my own store, right? Whatever cost I incur, that also gets added to my material cost only. Example is freight inwards. Clear with this? Are you all able to understand this? Yes. Now, insurance and other expenses relating to procurement, not for maintaining the stock. On the freight, I might have some insurance. that insurance you're talking about. For storing the raw materials, sir, there is some insurance. No, no, that will not get included under your raw material cost. That comes under your production overheads. That's a fixed cost, guys. Clear? It's indirect in nature. Are you all able to understand this? Right? Any trade discount, it should be subtracted. Any duties and taxes, GST paid. Sir, I paid 100 rupees for the stock, correct? Plus, let us say 12% GST. Now, is this GST a part of my cost? Now, you need to know if this 12 rupees is eligible for ITC, input tax credit. In that case, it is never a cost. Guys, correct? No. So, only 100 rupees will be your cost. Guys, are you all clear with this? Yes, you guys know ITC, input tax credit and all, some basic GST. Yes. Now, suppose ITC is not eligible. In that case, what will you do? The entire 112 is going to be your cost. Are you all able to understand? Now, there was one more adjustment in an earlier question. Beautiful thing. Now, this indicates that institute expects you to know your GST concepts also. They said, our company, they purchased some raw material by paying 100 rupees, right? Plus 12 rupees of GST, but this was paid under composition scheme, right? Composition scheme is there in your GST. Now, the rule of composition scheme is that if you're paying under composition scheme, you cannot take credit. The line of credit will stop. You guys know that. So, you cannot take an assumption that credit was availed and all here. Composition scheme itself means what? You cannot take the credit, hence the entire value is a cost. Right? If you're smart enough, you would have pointed one mistake. In this case, ideally, if you're under composition scheme, ideally speaking, that supplier cannot charge you any GST. Right? He cannot charge you any GST because he pays the tax as a percentage of turnover. So he can sell it only at 100. For him, the GST is a cost. It cannot be collected, right? If you know. But in the study material, in costing, they gave this and they said it was paid under composition scheme. Don't get too technical and all. The moment they said composition scheme, it cannot be. You cannot avail the credit. It is a part of cost. Guys, clear with this? Some extra adjustments here and there I'm covering. Next, cash discount. Cash discount, always remember, is never a part of your operating expense. Sir, why, sir? If you study this working capital management, which I do in FM, there you will know cash discount is ideally a financing cost. It is ideally a financing cost. Sir, how, sir? Let's say you are supposed to make the payment within 30 days. But if you make the payment within 10 days, right, you are eligible for a cash discount. In your working capital management, in your FM and all, this is called as 2 by 10 net 30 and all, right? All those things, jargons they use. 2% discount if you pay within 10 days, else without discount, pay within 30 days. This is the meaning of that. Now, why is the supplier giving me this cash discount? Because you are paying him 20 days earlier. So for a period of 20 days, he need not put his funds blocked into the business. On that, an interest will be saved by him. So what he is doing is, just like that, if we ask you to make the payment earlier, you will not make the payment. Hence, he is incentivizing you by way of a cash discount. Ideally, this is all a part of your financing cost. Hence, it should never be considered for the purpose of our costing calculation. Are you clear with this? So now, when you are purchasing raw materials, right, they have said trade discount, subtract it. But when they have said cash discount, do not subtract it. Clear with this, guys? Are you all understanding this? Right? That's about it. Next, direct labor cost. Now, I have given all these slide items. Do not worry. Any cost associated with direct labor is called as a direct labor cost. Now, on my worker, that assembly line worker, for him, whatever wages I pay, on that PF, ESI, whatever comes, for him, whatever I pay comes under direct wages. Clear with this? You need not read these line items. You just need to know this. Are you all able to understand this, guys? Yes? Any issues here? No. Now, direct expense is the most important thing here because this is one area where students get confused. So, some costs, we don't know, sir, whether to put it under direct expense or under production overheads. Generally, this issue comes in. Fine. Now, this is a list of direct expenses actually being prescribed by ICAI, right? Most of them are logical. Some line items are illogical, but let us take it with a pinch of salt and do it. Clear with this, guys? Suppose if you see these line items, it need to come only under direct expenses. Clear with this, guys? Right? Now, once again, I will tell you the logic for certain items which you might otherwise not know. Now, expenses other than direct material and employee cost, which are incurred to manufacture a product or for a provision of service and can be directly traced in an economically feasible manner, is called as actually a direct expense. Or in other words, it is a cost that is readily available on a per unit level, but it is not a material and labor. Guys, clear with this? Examples for that: cost of utilities like power and fuel. I told you once again, this is a very controversial area. Some people say that power and fuel should come under POH. Some people say that power and fuel should come under direct expenses, right? Here they are saying it should come under direct expenses. Reasoning they are giving is, right, as I have to produce more units, I will run the machine for more number of for more hours, and as I keep the machine on for more number of hours, obviously my power consumption will increase. So it is directly traceable on a per unit level is what they are saying. Clear with this, guys? Next, royalty payments. I told you, Maruti paying to Suzuki and all, guys, correct? So every unit produced, they need to pay some 50,000-60,000. That's also traceable on a per unit level. Now this and this, these four line items can be clubbed together. Higher charges paid for hiring specific equipment, fee for technical assistance, cost for product or service specific design drawing, and cost or product or service specific software. These four line items are also a part of direct expense. But why? Sir, just now we did one sum where we said hiring charges paid on an equipment, instead of depreciation, you are hiring it for that if you pay, it's an indirect cost. Suddenly, how can it be classified under direct expense? Guys, this is where your conceptual learning will come into picture. Now go back to the basic concepts area. There I told you, first objective of our subject, what is it? A, stock valuation and profit computation. For that, cost can be classified into 4, A1, A2, A3, A4. A4, what is that? Job and unit cost. Now, in case of a job costing setup, what happens? I am dealing in an industry where I deal with customer specific products. That is, all the products are not the same. Example, Casa Grande, I told you, 4 different types of houses, I told you, not they manufacture, right? Or they build. Now, when I am dealing in customer specific product, cost needs to be collected job wise, correct? No? Yes, guys. Now, let us say I am dealing in one specific customer's job. For exclusively for that job, if I am hiring a specific equipment, right? If I am actually having some specific designs and drawings, right? If I am having some specific software, right? All these things will come under a direct expense. Now, does it make sense? Only for this job, I am going to hire a particular equipment. For example, L&T, right? L&T is actually taking up one job called as CMRL, Chennai Metro Rail project they are taking. For the purpose of honoring this particular project, they might hire a specific equipment. Like once the project is over, they will just release it back. They won't need this. Now, this is a direct expense, exclusively incurred for this job. They don't incur this cost for all their jobs. Guys, are you clear with this? Whereas if you are in a unit costing setup, then it doesn't make sense. It comes under production overheads. Are you all clear with this, guys? Right? So hiring specific equipment, fee for technical assistance, and here it goes, your specific drawing and designs before they start a project. Obviously it comes with all the drawings and all these things, right? Specific software and all, if you're paying, all these things are basically in a job costing setup. Are you all understanding this, guys? Right? But remember one more thing. Suppose in the exam they are asking a unit costing sum and still they are giving these line items. Please take it only as direct expenses. Don't attach too much of logic to it. This is what the institute is expecting you to do. Are you clear with this? It is my duty to tell you why they have classified it as a direct expense, and it is also my duty to tell you what needs to be done in the exam. Guys, clear with this? So the moment you see the word specific and all, generally it gets classified only under direct expenses. Clear with this, guys? Don't attach the logic. And also job costing, you are right, in the job costing setup it is actually a direct expense. In a unit costing setup it is going to be your production overheads. But for examination purpose, whenever you find these items, you always categorize this under direct expenses. Clear with this, guys? I wanted to tell this to you because it's very important, right? Production overheads, nothing needs to be seen here. Any indirect manufacturing cost incurred in a factory gets categorized under POH. Guys, clear with this? Special items, QC control cost. What is this? Any cost incurred for quality control, that is inspection purpose and all. If it is given, you need to do it. We'll do a lot of sums, do not worry. R&D cost incurred for research and development. Admin overheads related to production, I told you. AC room in a factory. Guys, clear with this? This is what they have mentioned. And the general administration overheads is not included here. This is different from that. Are you clear with this? Next, credit for recoveries, scrap income. Your primary packing cost, essential to hold and preserve the product. Coca-Cola example I told you. Guys, are you all able to follow this? Any issues here? And overall admin expenses, what do you mean by this? Any admin expenses refers to the cost incurred in your corporate office area. Guys, clear with this, guys? Now, in our subject, we are only dealing with the costs incurred in these three locations. What are they? Factory, administration, your corporate office, and your sales depot. Now, any interest finance charges, interest paid, will you consider? No. Dividends paid? No. Transfer to reserves? No. Bad debts? No. Your any kind of finance cost? No. Correct? No. Bank charges. Bank charges. What will you do with respect to bank charges? Where will it come under? Where will it come under? Will we actually consider it or not? Will we consider it or not? No is what many students think. But it should be considered. Now, why, sir? I will tell you why you said no. Bank charges. Bank means what? Lender. He gives me money. So anything that is associated with a lender is going to be my finance costs. This is a wrong thinking, because bank does not just provide, bank will not only provide your loans and all that. First, what do you need a bank for? They maintain your current account, right? You guys, you have debit cards and all. Yes, or every month they actually, or every quarter, they charge some amount for your AMC or some SMS charges and all. This is basically for maintaining your account. It is administrative in nature. Hence, your bank charges should be classified under AOH. Do not say that it's a finance cost. Are you clear with this, guys? It is not related to fundraising activity. It is related to your basically operation of your current account and all that. Your accounts basically, that's nothing but your administration cost. That's why I have put it under the doubt busters section. Clear with this, guys? Are you all understanding this? Right? Bank charges are treated as what? AOH. Are you all clear with this? Will you forget it? No. Right? And selling overheads, any cost incurred in a sales depot. Distribution cost, what is it? Any cost incurred for actually selling my products to my customer. Distribution, handling and all that. Are you clear with this, guys? Yes? You guys are able to understand this, right? Now, abnormal costs, any kind of abnormalities will generally not get considered in our cost sheet. More about normal, abnormal, loss and all that we will be seeing at the later section of our entire subject. We'll be seeing it later on, right? Suppose you have received any subsidy, grant and all from the government. Let's say I've purchased some raw material, on that some subsidy I've received, reduce it. It's not your cost, correct? No. So it has to be reduced, as simple as that. Any penalty, fines, damages, demurrage and all, that is basically any abnormalities. Generally what we do is we don't consider it as a part of our cost sheet, because this is not happening in the normal course of my operation. I will definitely not consider it. Now, interest and other finance costs, they are not included. Anything equity, non-equity, we are not bothered about. Any cost relating to fundraising activity is not a part of costing. Go refer FM. Clear with this, guys? Clear with this, guys? And what is this conversion cost? I will tell you later on. Guys, are you all clear with this? This is the most important understanding that you need to have. Clear with this, guys? Now, depreciation. Where will this line item come? POH. Wait. Don't jump to a conclusion. You should first ask me, sir, depreciation on what? Correct? If it is depreciation on factory building, I will say put it under POH. It is a depreciation on my office building, then put it under AOH. Depreciation on sales depot, SOH. Depreciation on delivery van, once again SOH. Distribution related cost. Guys, clear with this? Right? So do not mug up anything. What you need to do is go by the location where it is incurred, and accordingly you will be able to automatically arrive at which category it should come in. Clear with this, guys? It's that simple. It's that simple. Are you all able to follow this? Are you all able to follow this? Right? So before I conclude this session, one last time, can you guys tell me the format of cost sheet? We will revise it and we will wind up on a high. Right? Come on, tell me, guys. First, opening stock of raw material, everyone, opening stock of raw material plus purchases minus closing stock of raw material gives you what? Raw material consumed, direct material consumed. Add your direct wages, add direct expenses, gives you prime cost. Now to this, add your production overheads, you get what? Gross works cost. Now add opening WIP less closing WIP, you get your factory cost. Now 4 addition, 1 deletion, what are they? Sorry, quality control cost, administration overheads related to production, primary packing cost, then credit for recovery, scrap income, you get what? You get your cost of production. That's all. Now you get, add your opening FG minus your closing FG, you get your COGS, cost of goods sold. 2 guys are waiting outside the factory. AOH, add SOH, you arrive at your total expired cost, called as cost of sales. Add a profit, you arrive at the sales figure. Simple, guys. Are you all able to understand this? Right? So that's about this overall introduction and to this chapter. That's the predominant portion of this chapter. Right? So now, in the upcoming session, what we'll be doing is, we will be adding some more complexities to this, like stock valuation issues and all we will be seeing. Are you able to understand? And different varieties of problem we will be covering. And with that, this entire, all the varieties of questions we'll be covering in the upcoming sessions. Clear with this, guys? Right? So with this, I am concluding this session. So please revise till whatever we've covered till now, and I will see you all in the next one. Thank you all so much. Bye-bye.